Good morning. I would like to welcome all the attendees this morning. Such a nice weather in Sydney this morning, nice and sunny. My name is Eric Tjoeng, CEO of Business Growth and Exit Specialist. We are a boutique business advisory firm with 7 partners in Sydney. And we work with our client to grow their business profitably, as well as future-proofing their business. And very importantly, have an end in mind that is for the business owners to exceed with the desired outcomes. To start with, let me share my presentation with all of you. All right. What we are going to go through this morning is the topic of post-COVID government subsidies 2021 and you, thrive, survive, or dive. And the format of the presentation this morning is 2 short one, around 15 to 20 minutes, followed by Q&A session with our expert panels who has wide experience in business. So if you have any question during this session, and you can type in your questions through the Q&A box right down the bottom, and we will certainly address them after the presentation. 2 areas that I want to go through this morning are critical to being able to move forward, survive and thrive under current environment. The first one is our mindset requirement. And the second one is our strategy and action. Just a quick reflection on COVID-19 challenges. All of us are aware border closure, trading restriction, movement restriction, of course, supply chain disruption. How can we forget? Remember, all those big hoo-ha about people queuing up, at the supermarkets and fighting for toilet paper, and that was certainly hilarious, but was a real challenge with the supply chains because the supply cannot meet demand. And of course, businesses are pivoting to survive and grow. In fact, you can see that a lot of them actually doing quite well if they take the right action. One important thing, government subsidies, government propped up the economy in the country through various measures, so the businesses and individual can survive as much as they can. And of course, we got to adapt and work from home. Very importantly, we are more aware about mental health because of the isolation and the stress. The current business environment, surely what is concerning is the couple of key government stimulus just ended on Sunday, being the JobKeeper and JobSeeker. And some new one, of course, is emerging, especially in art and hospitality industry. And vaccine is here, which is good. They provide some assurance of eventual normality over a period of time, and easing of trading and movement restriction. Customer buying process and expectation are changing, and the expectation of some flexible working arrangement as well, among others. So really what we are entering into is the new normal, where we are actually working under very dynamic and uncertain environment. So case in point, unfortunately, because of the virus outbreak in Queensland, there is a 3 days basically restriction starting today again. So what would it mean to business? How would they react to that? Obviously major disruption to businesses and traveling. Whether we will thrive, survive, or die is highly influenced by few things. The first one is our leadership mindset. The second one is our business strategy. And last but not least, our action. So let us do a quick polls. Basically, the polls giving some indication of the business sentiment with the attendees, and also whether we are aware of our opportunities and threats. So let me stop sharing the slide and go into the poll. So the first one that you can see on your screen is basically quite a pertinent but simple question. Is about your concern with the current situation. Either you're very concerned, somewhat concerned, not concerned, or not sure. So I'm going to launch the polling now. So can you just basically type in your answer there? And I just give it for quick 20 seconds to get the answer, and what is the sentiment within our audience this morning. All right. I'm going to close this poll within 2 seconds. Looks like most of you most probably haven't actually quite there yet, but just get a quick indication. I just end the polling here. So based on the responses that we have, most of you somehow concerned, and 20% is not concerned. Which is most probably quite typical. That is an indication with the dynamic and uncertain environment, what is happening there. Right. And I think that gave us a quick indication of the sentiment within the businesses around Australia and overseas as well. So let me share the presentation again. The way we see it, with our experience helping businesses for many years, one of the critical success factors, especially now, as leaders, we need to be innovative, be able to think outside the square, to come up with a different way of doing things, and be adaptable and flexible, and of course, to be agile so we can make quick decision making. So there are certain conscious choices we should make. I think the first one is the most important. We need to have a positive mindset to react to uncertainties, because without that, nothing else most probably would matter. So for example, under current situation, if we think, okay, we face these challenges, so how can we activate our creative mindset to come up with a different solution, to understand and adapt to the situation, and come up with a positive action to sustain the business. Okay, that's quite important. Otherwise, if you are overwhelmed, nothing will happen. The second part is focus on what we can control. So focus on what area can we do, how can we fine-tune our business model and strategy, and how can we, for example, service our clients through technology and provide contact-free delivery. And the area you can control, all of us are on the same boat, it doesn't matter. And last but not least is to surround ourselves with the right people who can energize us and provide the necessary knowledge, experience, advice to succeed. I think if we don't have this leadership mindset and have a conscious choices, most probably we are not going to go anywhere. I guess the other critical ingredient is we need to visit our business strategy and come up with a new business roadmap. In other words, adapting and fine-tuning our business model. There are 10 key areas that I want to go through and give you an example. You can relate that to yourself. If you got question, then you can put it in the Q&A so we can address that. So the first one is focus on the right target market and value proposition. Just give you an example for ourselves. Our target market is small and medium-sized businesses, but there is an additional dimension with COVID-19. So our target market would be the businesses who are willing to communicate through technology so we can help them. Right? So if they say, well, I only can do face-to-face, I don't want to do anything else, they will not be our target market under current circumstances, because obviously it would be very challenging and difficult. So the other value proposition they are looking for is a quick response. Right? So the second point is understand the changing customer needs. For example, in our situation, the needs more towards survival, be able to help them and react to them in a very short period of time. For example, our business valuation normally take between 2 to 4 weeks for us to complete. Now we actually can complete that within a week to fulfill the requirement out there for merger and acquisition. The next point is we need to map into changing customer buying behavior. I'm pretty sure you are aware some of your customer buying behavior has changed. In ours, for example, normally they're buying behavior through referral mainly, and then they want us to go out there face to face. With COVID-19, we found out we got more fresh inquiries, and they are quite happy to initially talk to us on the phone or Zoom. So there are challenges for businesses who are not willing to do that. We might lose them, but at the same time, open up new opportunities. Now businesses around the country and some overseas actually talk to us to say, hey, we are quite happy to engage you now, just through Zoom. Next point, we got to review whether we are selling the right product and service at the right price. For example, at the moment, a lot of our services focus on basically fine-tuning the strategy, come up with a new roadmap and financial control for survival and sustainability. And at the same time, we actually bundle it different way for them to be able to afford us under current challenges. So we have a bundling between retainer and success fee, for example. Marketing strategy and channel to communicate with your target market. Once again, you got to rethink. Interesting example with us is that, we seldom do any marketing, but with the flood of inquiries now from our online social media, our strategy, for example, is exactly this. We are doing a seminar so they can know us better. But at the same time, obviously that will give a new channel to be able to communicate with them rather through our traditional channel of referral. The next one is we need to have an effective sales process. Obviously, marketing, get them to know you, but your sales process is the one converting them into your customer. We need to have effective sales process. With the current condition, you need to think about it. On our panel, we have few people who are really good at that. You can ask them questions, but effective sales process, to us, that can be automated, can mean giving further information they want to know. And that is part of the sales process. When they are ready to talk to us, obviously, then we can communicate with them, either through Zoom or phone, or if allowable, face-to-face. The interesting part about having efficient and effective product or service fulfillment is important because the expectation has actually changed. For example, if you order online, I remember, a few years back, a week or two is acceptable. Now with the experience and advancement in logistics, they expect to receive it, either tomorrow or the day after. So you need to have a look at that. And adopting empathetic customer service is a must. A lot of people are under stress. They want to deal with you and want you to be able to solve their problem. For instance, if there is a wrong size, is it easy to return the goods? If there is an issue with the product or service, is it easy to get it fixed or replacement? They would expect that you are more understanding at this point of time. The next part is, I know about artificial intelligence, robotic and all that, but at the end, we still need people to run our businesses. So to have the right people on the bus with the right attitude is critical, and the wrong people off the bus. Otherwise, most probably the bus will not run very well and will not move forward that far. So one last point, I think the next presenter, Ronel, will focus more is really focus on, okay, you now come up with a new business roadmap to move forward, fine-tune business model. But in terms of your finances, can you cash flow sustain it? Are you going to make money over a period of time? If you are not, what we do with our client is fine-tune the business model so that it can achieve the profit objective. At the same time, come up with a model that in terms of cash flow is sustainable, whether you tweak it the way they are going to pay you, the product you're going to provide, or the service you're going to provide, or even go further, arranging and exploring, different financial support for financial institutions. So those are the area I think you really need to think about at the moment to fine-tune your business model to come up with a new business roadmap. I guess all this is fantastic. You get a great mindset, you got a good strategy, but unless you have, positive action, nothing will happen. So I just want to share with you 4 tips about action. The reality, all of us are resource, hungry and resource limited. So number 1 tip is focus on low-hanging fruit. In other words, focus on the areas that with least amount of time and money will produce the greatest improvement. Second tip, I think this most probably quite obvious with a lot of you, leverage on technology. If you have a look at it now, the way you communicate with your client, through Zoom, the way you, most probably some professional firms, some document, is through electronic signature, right? The way you do your marketing and sales, you leverage on CRM to automate some of the responses and manage accountability. And the third tip is, if we want to produce better results, not only with our own resources, it's basically we need to collaborate with other businesses with the same objective to produce better results from all of us. And the fourth one, that is very important. Everything we do now is got to be quick, in other words, agile, whether it's marketing, human resources, sales, operation, all that. You basically need to have a look what you're doing now, come up with a new way, test it out with your client, and improve it as you go along. You cannot afford the old way of doing things, tick all the boxes before you roll it out. And I did say 4, but there is an additional one, most probably a must now. Case in point, I was talking about, the restriction in Queensland. You need to have a rapid decision-making process in place to understand when things happen, what area you need to consider very quickly, who are the players in those areas, how are you going to communicate with them to recover from the situation. For example, if you are opening a restaurant, suddenly got to close in 2 days, obviously you got to have a look at your key stakeholders, being your people, what are you going to do with your food, etc. Now, the last part is, as business owners, isn't it interesting that we sort of try to be doing everything ourselves? You are juggling so many balls, in business that will include, your product or service, your marketing, your sales, your fulfillment, your human resources, and your operation. I would say that most of us are good in certain areas, and we are only as good as our weakest link. As a result, the smartest thing to do is get expert assistant in the area that you are not so good at to complement you to make your business sustainable and profitable. And I guess there are two ways to help yourself. That if you wish, you can do that. You either can, go to our website. There are very short 5-minute survey customized to who you are, where you are, and you get a quick insight about your business. The same thing if you want to exit your business, you can do the same thing. Within 5 minutes, you'll get the answer. That would be a starting point for you to think, all right, what action should I do next? The next thing as well, if you want to have a chat with us, by all means, obligation free, just email us, info@bges.co. I think that will work well. And I just want to thank you for listening to this short presentation. Once again, as you know, I'm pretty sure you have some question, but be patient after the next presenter. There are a lot of opportunity to ask this question. We will address it as panelists, and we'll go from there. So thank you for listening, and without further ado, I would like to hand it across to Ronelle Wilson, our next presenter. Thank you.
Thanks, Eric, for that great presentation. Lots of good points there. I'm Ronelle Wilson, a partner with CIB Accountants, and we're a 5-partner firm in Western Sydney, and we look after all sorts of business advisory and accounting and taxation for mainly small and medium enterprises. So my presentation today is going to be focusing on business strategy for companies and individuals that are really struggling through COVID and really need some tips on how to survive, and if they look like they're going to die, what actions they need to take. So let's reflect on the government stimulus packages that we had. So Jason, you're looking after my slides today, so we can go to the first one. Next one. Yeah, so the government stimulus packages, just to reflect, the main ones were the cash flow boost, which was a great gift to employers. The JobKeeper, which was ideal to keep businesses basically propped up, and also to get a lot of support out of the Centrelink system. The Job Seeker, for those that needed to rely on the Centrelink system, where there were over 1 million people that were on that program, and the outcome for those people, now that it's changed, could be quite uncertain. And there were many rental concessions and a code of conduct put in place for residential and commercial properties, whereby there were rental deferrals, rental holidays, and rental reductions. So they're all coming off now. So we really need to look at what's going to be the landscape going forward. Okay, next slide, Jason. So just to reflect on COVID, there was a lot of stress, there was a lot of problems, but I think it's important to reflect on the fact that it was quite positive at many levels. There were a lot of companies that did thrive in COVID, and that may have been quite fortunate that they were in the right industry or they were in the right location. As for some businesses, they were in the wrong location. They might have been in a CBD location where nobody was coming into their coffee shop or their shop. So great leadership and resourcefulness, adaptability and crisis management were some of the key factors that we saw for businesses at the top level who actually did really well in the COVID period. Okay, next slide, Jason. So the landscape for 2021 in terms of the financial landscape. So the government stimulus packages are about to end. JobKeeper has now ended, or they're severely cut back. There are some industries that are getting a little bit of a kick, such as hospitality and the travel and tourism industry, but really it's not long term, and it's severely cut back. Most employees are back to work. Industries are getting back to normal as the borders are now open. There are still some challenges with border closures, as we've seen most recently, but in the main, most employees are back to work and businesses are getting back to normal. We're seeing in the banking sector that the banks are tightening their lending limits. And during the COVID period, there were a lot of deferrals on repayments. those are starting to be called in by the banks now. That deferral period has now ceased for many borrowers, and now they're having to need to start to make repayments. And for new borrowers, the banks are also being quite conservative when it's coming to new lends. From the ATO perspective, what we're seeing also is that they are ramping up their activity for chasing debts and also chasing outstanding lodgements. So many of our clients had deferrals for lodgement and payment during 2020, and those periods have now ceased. And the ATO is ramping up their activity in chasing clients and taxpayers for their outstanding lodgements and also for debt collections. Payment arrangements, which were pretty easy to get during 2020, are not so easy to get now. So we're seeing a very different landscape there. Rental payments, so the rental deferral periods have now ceased according to the code, and we're seeing that those periods, those rental payments will now be required to be made. And so that will cause a strain going forward for many businesses. And just on the vaccine rollout, I've heard that it could take up to 5 years for everybody in the world to be vaccinated. So that's a long period of time. So the impact of COVID is going to have a long-term impact. And that will impact travel and international business as well. So it's not really a quick fix, but we're certainly on the way to getting back to normal, but there is a long-term impact of the COVID period. Okay, next one, Jason. So with the JobKeeper, there were over 1 million businesses on JobKeeper at the peak, and around 450,000 in this last second phase that's only just ended. What we're expecting to see also is that insolvencies of businesses will be on the rise, possibly around the June period, as there are several months of trading post JobKeeper, and it's going to start to pinch a lot of businesses after that time. So the JobKeeper, as I mentioned, has been extended for some critical industries, but it's not a long-term fix. There is one lifeline that the government has thrown out there, and that is the new SME Recovery Loan Scheme. So this is a scheme that the government has arranged with lenders, where it is going to work with the lenders to ensure that certain eligible businesses are able to access finance up to 30 June 2021 to help them grow and stay alive if that's needed, post the JobKeeper subsidy. So it's only available to those that were in phase 2 of the JobKeeper period. So that was from October through to March, and you had to demonstrate a more sustained long-term reduction in your revenues from the previous year for that second phase to apply. So the government will guarantee 80% of the loan. The limit's $5 million up to a period of 10 years with an interest rate capped at 7.5%. Also allowed will be a repayment holiday of 24 months, and it can be in either a secured or unsecured loan. And so we've seen that, I know for NAB and Westpac, they have applications on their website. So if there are businesses out there that feel that they are able to be eligible for this scheme, then that's the way you contact your bank. Although I do expect that the banks will have their own lending criteria and will do their own assessment of the viability of the loan as they're required to do. Okay, next slide please, Jason. Okay, so if your survival is uncertain, the two areas really that you need to do is you need to look critically and you need to plan. So you need to develop your financial strategy. And to that end, it's really important that you engage early to get advice where needed with your accountant or advisor, because if your business is going really badly, you can be liable for personal penalties and personal liabilities for insolvent trading. And that is not a space that any director wants to be in. So the steps that I've identified here that any business should take are as follows. So the first one is identify your main risks in your business. So risks personally, first of all. So what personal guarantees have you given? What liabilities might you personally have in terms of unpaid ATO debts and superannuation debts? So assess where your personal risk is at the moment. Also have a look at the risk that your business might fail. Was your business struggling pre-COVID? And the COVID period just was propped up by these government subsidies. So really take a critical look at your business. Have a look at your revenue streams and look at the risk in your customer base. So what industries are your customer base in? And this is going to be different for every kind of business. But stratify your customers in terms of their risk of failure or their risk of not paying you. We did this in our own firm. We did a big exercise on all our clients and we looked at their industry, we looked at their profitability in terms of their history, and we allocated a risk profile to each of our clients on 2 levels. One was, were they in an industry? Did we think their business had a certain level of risk, low, medium or high? And did we think that their ability to pay their debts, was that going to be low, medium or high? And through that modelling, what we were able to do was present a worst case scenario. And what that did for us, it gave us a bit of a worst case scenario projection. And it helped us make the decision as to whether or not we needed to cut staff or cut staff hours. And the good thing that came out of that, the good thing that came out of that was that we didn't have to cut any jobs. We didn't have to cut any hours. And we were very lucky and fortunate to have a very diversified customer base. So we weren't exposed in one particular area. So that was really, really a good exercise. And depending on the sort of business you've got, if you can do that exercise, I think it gives you an idea of what the future might look like. Model scenarios of revenue, cash collection, and costs. So model scenarios of revenue, if you're at low, medium, and high levels of revenue for your business, and look at the cash collection terms. What does that look like going forward? Do a cash flow model, and if your costs are exceeding your revenues, you could have a real problem there. So identify those basic profitability and cash collection metrics for your business. The next point is to really delve deep into the core profitable activities of your business. So for any business, it will be different. Is it the activities? Is it the products? Is it the particular employees that are profitable, either a sales employee or a professional employee that does professional type consulting work? Focus on those that give you the best margin and offload the others, or have less focus on the others. It's really important that you gain best bang for your buck in terms of profitability during this time. And if things don't look so good, COVID is actually an opportunity for change. You need to make some hard decisions regarding your workforce, laying people off, or your processes, laying product lines off, divisions off, that sort of thing. COVID is your opportunity now that these subsidies have finished, and it might help you with a hard conversation. And we saw a lot of businesses do that during this time. Okay, next slide, please, Jason. Number 2, we've all heard this, cash is king. So it's really important that you determine your real cash position, not just your bank balance, because your bank balance is probably overstated if you've received cash flow boost and JobKeeper. They're stopping now, and many small businesses record their books on a cash basis rather than an accruals basis. So there's a very good chance there's understated liabilities. So there might be deferred rent. You might not have put that on your balance sheet. The employee leave entitlements. Many small businesses don't actually record those, and that can be for redundancies as well. Lease liabilities, where you've had a rental holiday, and other commitments and tax obligations. So you really need to look at your total bank balance and include all of those liabilities before you sort of make any decisions as to the viability of your business. Forecast your cash flow weekly. Cash flow projections are always a bit hit and miss, but it's always good to get some sort of idea as to where your cash flow is going on a weekly basis. Product supply chain issues. So your business might be going well, but what if your suppliers fall over? You need to source alternate supply. And you need to also assess the domino effect of customer collection failure. And what that means is that your customer might have a strong business and therefore you think they might be able to pay you, but their customers might have severe financial problems. So your customer might fall over because their customers will fall over, and that's the domino effect that will impact your business. So that goes back to the risk profiling of your customer base. If cash is a problem for you, look at what the available sources of finance are. That can be loan funds, as I mentioned with the SME loans, new equity investors into your business, debtor factoring. Debtor factoring is a good way to get cash straight away from invoicing, but it is an expensive form of finance. Next one. Thanks, Jason. Okay, optimise your spending and resources on the other side of the revenue. Look at your critical versus non-critical expenditure. Very important. Look at all your overhead costs, phone, internet, all of that sort of thing, all your utilities. Make sure that you're on the best deal for those. Make sure you're getting bang for buck with your marketing and media presence. Rejig where you're spending your money in terms of your marketing so that your business is in front of the most customers, potential customers that you can make it. Review your people, your premises, your fixed cost and your supply chain. So look at all the costs in your business. Do you need that big office building? Do you need that big premises if people are working from home? Reduce your fixed costs where you can. Next point is to shore up your workforce. We found that employee movement was very low in 2020, but people are now starting to move around. They want to be also in a secure business. So if your business isn't doing so well, employees might get wind of that and they'll want to go to a business that is doing a little better. So we're seeing a bit of movement there, so shore up your workforce. Mental health also suffered, and you can actually get a first aid certificate in mental health, which is a course which gives you some strategies to deal with mental health, because it's for employees and employers, it was a difficult time. And invest in training. That tended to fall off the perch a bit in 2020. Invest in training in your workforce. So make your business ready for the future and make your employees feel that this is a place that they want to be, because finding good people is one of the hardest things that any small business needs to do. Flexibility is now the norm, and the working from home scenario is good and bad. It can either drive up productivity or it can actually decrease productivity. So expect that employees will want to have some sort of flexibility. And lastly, develop your long-term crisis management plan. Analyse your competitors in the industry, look at your market, develop your long-term business plan, and look at your adaptability to change your product focus, your supply chain, technology focus as well, as Eric mentioned, so that you are a business that can go forward. Next one. Okay, so we want to talk about the risks for owners and directors. If you are facing insolvent trading, there were some safe harbour provisions and they ended on 31 December. So the ATO has said that they're not going to prop up failing businesses because the government feels that they've already been generous enough. So what we're seeing now is that there was a moratorium on director penalty notices. Excuse me. So ATO director penalty notices are notices that directors receive where the company's income tax, GST or superannuation hasn't been paid, and the director can become personally liable and needs to take immediate action within 21 days. So yeah, they're not nice notices to receive from the ATO, so we're expecting to see more of those. Also, there's personal liability for directors and those not protected by the corporate veil, so those not operating a company. So sole traders, those that operate through a partnership, those finance arrangements may be called in as well. So the message is it is best practice to call your accountant early and protect your assets and stop the losses before you find yourself in a position that you just can't recover from. And also consider, is it time to sell? Often selling your business, if you can get a buyer for it, it may be, you may not get a lot for your business other than to be able to pay off all your creditors. And sometimes that might be a good outcome if the future doesn't look bright for your business. So selling is definitely an option so that you can get your debts paid and move on to something else. Next slide. So where insolvent trading is a real risk for some businesses, the government has introduced some small business restructuring rules. So these really apply to companies. So if a company wants to continue trading, these new insolvency laws allow a small business some flexibility to restructure their debts with their creditors and make an arrangement, and that will allow them to come out of that process. So the eligibility is for smaller businesses where the total liabilities are no more than $1 million, the employee entitlements are up to date, and all tax lodgements are complied with. The difference between a usual liquidation process and these new small business restructuring rules is that the directors retain the control of the business. So the process is the directors pass a resolution and they need to appoint a small business restructuring practitioner, which is an insolvency practitioner, to assist in developing the restructuring plan and proposal statement for creditors. So it's like a deed of company arrangement whereby you put a proposal to your creditors to pay them a certain percentage of the debts that are owing if you're unable to pay them in full. So that might be, say, 30%. So each creditor will get 30 cents in the dollar. So this plan is then developed and it's put forward to the creditors, and it can be executed if a majority of creditors, in terms of their value of debts owed, agree to it. And once it's accepted by creditors, the company is then deemed to be insolvent, and but it can come out of this process and continue to trade and draw a line in the sand. This process does get reported to ASIC. So the company will have in their name, in brackets, in administration after their name, and it will be publicly available information. So it's not something that can be just done as a side deal. It is a formal arrangement, but the directors do retain control. Next slide. And lastly, just on the same vein, there is also a new simplified liquidation process that has been approved by the government, and it's a streamlined creditors voluntary liquidation for companies with valuations of less than $1 million. So for smaller companies, the same eligibility criteria applies as to the small business restructure provisions. And again, it must be done by an insolvency practitioner. So if things are at a really dire position for your company, this might be the best way out if there's no chance of selling or repaying your debts, and this might provide a lifeline to your business. So if you have any questions, please feel free to contact me. And I'll hand you now back to Eric. Thanks.
Thank you, Ronelle. That was certainly an excellent presentation and some sound advice. And I just want to introduce our panelists for the Q&A. We have George Mafros, got a lot of experience in marketing, sales, and IP. We have Martin Colon, our legal eagle in business law and various other laws. And we have Milin Pukani, our IT and CRM expert, and Jason, a specialist in digital strategies. Okay, so I just want to open it up to the panel. And Jason, if you can unmute the panel and draft few questions going through the Q&A. If you haven't done so, please type new questions through the Q&A. Maybe the best thing is that we just unmute the panel, Jason. Okay, so just from our panel, is there any interesting comments or your experience after sharing? After we have shared our presentation, that you want to make a quick comment before we dive into the Q&A?
Eric, I got a few points that I'd just like to touch on based on the presentation from both yourself and Ronelle, and thanks very much for that. Yours was good. Ronelle, yours was fantastic. There's a lot of good information in there for companies. So,
thanks.
few points that I just jotted down from a sales and marketing perspective. Because of border closures and threats, people that are in the travel industry or in the tourism industry, you need to be thinking about things like, how do I have a more flexible package and how do I have a deferment package? Because I've just come back from my honeymoon. I spent two weeks in Western Australia and South Australia. The number of people that we met on the road that would not travel outside of Western Australia, or when we were in South Australia, because they are that scared that they're going to get somewhere. The ones that we met that were a lot more comfortable had some sort of deferment package with their supplier before they embarked on their trip. The next thing is, if you're a restaurant or a pub or a club or an organisation that's using consumables that are perishable, it might be worth your while to pay a little bit more for your perishables to get a little bit less, because the real loss is in the stuff that you throw out. So one of my clients, we were talking the other week, and he's paying about 5% more for his perishable foods, but he's able to really cut down the volume compared to what he did before. Because some days he doesn't know whether there's going to be 1 or 20 turn up. So think about that. Renel's point about the vaccine rollout, 5 years, people think that's crazy. It's not. 5 years before we start to think about global is going to make a huge difference to Australia. If we don't have the international tourists, it's not just the tourist industry, because the tourist industry buys pens and paper, and they have desks and offices, and they have technical and all of that. So you need to think about what will be that impact on you, and you might be 3 or 4 tiers down in that supply. It's like when a builder goes bust. The builder goes bust, hits the electrician, the plumber, the concreter, the timber merchant, the hardware store. So you've got to think about that flow. Where are you? And Renel, I love that stratify. You should be stratifying where you are in your supply chain too, because if Jimmy goes bust, what is that going to do to me? How far down the ladder am I? The fourth thing is, we talked about marketing and we talked about sales. Right now, if people can't buy your product and you don't do anything, they'll forget who you are. So you have to be trickle feeding out more marketing so that when they're ready to buy, they still remember you exist. If, on the other hand, you're in a business where people can buy your product, stop selling them a long-term message about, look, over the next 2 years, if you want to come and see us, that's great. Find things that you can say, come and buy today. So marketing and sales, which one am I using and when? And the last thing that I'd like to remind everybody about, since COVID's come in, we have gone to remote everything. We're doing remote learning. We're doing remote sales. We're doing remote administration. Everything's remote. I'm 65. I honestly believe that I learnt at least 20% of what I've learnt at what I call coffee machine education. It's when we come out of the sales meeting, or we come out of the partners meeting, or we come out of the office meeting, you go to grab a cup of coffee, and that grey-haired wise man or woman says, you know, when he was talking about that, this is what he meant. Your younger staff, your less experienced staff, are not getting coffee machine education. So when you start your weekly Zoom meetings, great idea. No, it's not if it's just business. One of my clients has now, when they have a Zoom meeting every second day, and there is 15 minutes where it's just an absolute free-for-all, and they have these little chin wags, and they talk about this, they break out into other sections, they organise to have a meeting later. So don't forget, coffee machine education is gone for many people. Bring back some Zoom education. And with that, I'll try and shut up.
Very good, George. Certainly your comment always enlightening. I got most of a few things to say about that. But most probably it's better for the rest of the panel if you got some, opinion you want to share. I think now is a good time before we answer some of the Q&A, question. Milind, you got any view to share with us today?
Yeah, actually, the George raised a really good option there. And George, like, what we say in IT area, what the chief technological officer could not do in 50 years, COVID did in 1 week. They moved everybody out on their home and everybody was working together. Yep. So that observation was really good. And one of the thing is we have to make use of the digital area. And after COVID time, now when everything is stopping, it is the best time to go on the technical, what we can do. We have to align the organization from the new digital priorities, whatever is required. So that is like in short, what actually I would say we have to think about when we are proceeding further with it.
Very good. Yes, indeed. What about you, Martin? From the legal side, is there anything that under current circumstances, we need to pay some attention to?
Oh, thanks, Eric, and congratulations to you and Ronel for your presentations. I think going back to the issue of flexibility and staffing, both in terms of workplace organisation, working from home, and different ways of dealing with clients, it's important to look back at your contract, your employment contract, and renegotiate perhaps with them or review that to see how it fits into the new hours arrangements or the working from home arrangement. Make sure everyone's on board with the same sort of conditions are being met. You also need to think about your employees and what structures they have at home to actually to work from home. So are they working at the kitchen desk, sitting on a stool all day, rather than in a proper chair? Like the ergonomic situations, it's their physical and mental well-being working in these new environments that are still important to you as an employer. And so it's important to think those things through. I found myself dealing with clients on Zoom. You've got to think about the processes and following up that I'm used to seeing clients and having some paper and they go away and then I can sort of base myself on that paper, but that doesn't work when we're talking about Zoom. So it's also important to know how to do the follow-up with your clients and keep that engagement with them.
Yes, they're so relevant at the moment, really.
Eric, can I just ask Martin a question on what he just said? Because it just raised something that I hadn't thought about. Absolutely. Martin, with staff now working at home, what impact would that or could that have to a company as far as workers' compensation insurance policies and things like that, and also public risk? If people are now working remotely and there's more clients coming to more locations, should companies be reviewing both workers' comp and public risk policies with their respective organisations?
Well, certainly, I think most people are working from home are generally in business, in professional services, or in banking, in the bureaucracy behind the banks. I don't know that they're often seeing clients at their home, or perhaps they might be visiting clients at the client's place of work. But certainly, as far as workers' compensation goes, yes, if they're working and they're injured at home, the employer would still have liabilities there. And that goes back to what I was saying about making sure they have a safe working environment. As far as visiting customers, places of work, well, it'd still be the same as it has always been, because you have in different industries, you've still got your employees going out to do work at customers' offices or construction sites or whatever. So it'd still be if that's the nature of your business, then it should still be part of your workers' compensation policy. But if it has changed with COVID, yes, you'd need to see your insurance broker to make sure that your policy does cover that changed circumstance.
Very good. Thank you. It's quite pertinent to what we are doing now in current environment. Jason, as a digital strategist, you got any comment?
Yeah, sure. I think everyone would have experienced a big shift in how they service their clients through COVID and following COVID. I think with your digital strategy, it's important to serve clients through Zoom, but also traditionally. So a hybrid model of servicing your client can really work, where if you are able to bridge the gap when they require it to be serviced through Zoom or other online communication platforms, whilst also offering a face-to-face aspect of communicating with them, I think that's very important, because I find that even for my clients, young and old, they still like to see you face-to-face. So you might reach out to them, you might communicate with them now through digital strategy, through Google Ads, through Facebook, social media, and other types of media. But ultimately, sometimes clients will still want to see you face to face. And may it be through Zoom initially, or may it be through a meeting at your office or a coffee shop. I think you need to find the way that your clients like to be communicated with and tailor your business communication that way. So not only focused on digital is important. You need to have a good digital strategy in this day and age, because everyone is having touch points with your business through the internet, through your website, through social media channels. But it is still important to offer a face-to-face aspect of communicating with your clients if they wish to do so.
Yes, very good comments indeed. I think got to be, I guess, agile, flexible, and reacting to what is allowable and not allowable in terms of face-to-face. That's great comment. Now, I actually can see some questions through the Q&A panel there, if I don't mind. If you don't mind, I'll go through them. And one of the question, most probably is quite commonly asked whether it's during COVID or not, which is quite an interesting one. The question is, with tightening our belt and less money to spend and all the worry about whether we can pay our bills tomorrow, should we cut down our budget on marketing and sales? Including try to explore marketing sales automation through CRM, for example. So I think obviously either George, Milin, or Jason can answer that. Milin, you want to answer that one first?
Yeah, we'll go for that. I think like this is the time when the people or the business think about, okay, this is my expense which we can cut down. But this is one of the things where you can make use of the automation a lot and make your people more productive using those technologies. And this is the time when your competitor might be thinking about the same way. So it's a best time to actually increase, from my point of view, to make use of that technology and increase your marketing and sales efforts. I think George might also give input from his point of view, where actually what happens in the sales area. But because of the CRM, because of the right now, the technology which is available, say artificial intelligence in the CRM system, it is quite possible that very easily you can cut down number of calls which you are making to the number of people, because you can just fine tune and target those people who can actually give you more sales. So in place of cutting down on the budget, it is the time when you can think about how I can automate the things which can give you more bang for the bucks. That's from my point.
Right, good. Just for the audience, because looks like there are a few questions coming through here. Certainly, we will extend our session if you want to stay and network or ask further question or listening to the answer to this question. I actually got like 4 or 5 questions that we would like to address. So we basically all of you are more than welcome to stay until 11 o'clock. So I think we just keep going with the question. George, you want to also add some comments with this question?
Yeah. As I said earlier on, the mistake that a lot of people make is they say, oh, things are getting tough. The first thing I'll do is I'll get rid of my sales or my marketing, or both. If you go back and you do study of sales and marketing and business trends, when there's been depressions, the global financial crisis and all those other things, those companies that continued to market or continued to advertise during that period did significantly better than those companies that didn't after the event finished. They may not have done dramatically better during it, but they did better after it. If we go back many, many years ago when we had the great J-curve of Paul Keating and other things that we went through, I happened to be running Artline marking pens. And we had this huge pen stand. It was like back in those days, and I'm talking 30 years ago now, it was a $1,500 buy-in for a retailer. And that was just horrendous at that time. We had a multitude of these stands. So what I said to the guys was, and our lady sales reps, what I said was, let's not worry about the profitability. Our company was reasonably profitable. We could run a fair way and break even. We're okay. So we placed over 150 of those stands during the downtime in the economy. When the economy turned, there was 150 more retail outlets that had the full Artline range, and our sales just took off. So you need to think about, do I spend my dollar trying to encourage them to remember me at the end, or do I spend my dollar to come and get them to buy from me at the moment? If it's a holiday, it's pretty silly trying to get somebody to buy an overseas holiday from you right now because they can't go there. But marketing is about, if you're thinking about buying fresh fruit, I'm the best grocer in town, come and see me. Advertising is, I got tomatoes, come and buy them today. So are you trying to get them to come in today? Are you trying to get them to think about you later? And a mix of both, I 100% agree with you, Melinda. If I go back to what I said, those that have done both through the rough time always come out better at the end of the rainbow.
It's a very good comment indeed. I'm going to make a quick comment about this, but before that, Jason, you want to make some comment because you're also in marketing and sales.
Look, some great points from George and Melinda. And with the digital strategy aspect of things, I think there is a lot of low-hanging fruit at the moment. With businesses choosing to advertise less through traditional means and digitally, the cost per acquisition of clients at the moment could actually be less than what you'd be looking at spending before. So from a strategic aspect for your business, like George said, it's important to continue to fill your funnel. If you are able to grab the low-hanging fruit now and continue to market to them through digital and offline means, what you might find is you're filling up that funnel and you're able to manage them through a CRM and good sales and marketing process. When it is time for them to make a buying decision to engage you for your product or service, they'll know who you are. They'll know that you're still running. They'll know that you're at front of mind and you may be the business to go with. So not only could it be cheaper for you to acquire these customers that you may not have had access to before, it is a really good way of ensuring that your business will be sustainable now and moving into the future. Because some businesses, yes, they will maybe turn off a bit of their advertising, save costs. I think it is important to look at the financial viability of your business. But if there is a way to get a good cost per acquisition at a cheaper rate than normal, I think it's a no-brainer. Everyone, I believe, would be happy with more business. So you need to look at your digital strategy and your marketing and sales and how you manage your new and existing clients and nurture them so that when we do get through the end of all of this COVID-19 business, you'll have a healthy funnel and a healthy business.
Yes, all the great comment, from Milene, George, and Jason. I guess the discussion is quite interesting. So actually go back to our presentation. If you think about it, if you come up with a clear new business roadmap, understanding who are your target market, what message you want to send to, and then the channel you want to use, and then your sales process. Now, you don't have to worry about whether you can afford it or not. If you have done, your financial modeling through our process, what we have done, obviously, to say, if you go this way, okay, this is the revenue, this is direct cost, this is your fixed overhead, and then how much are you going to put in the budget for marketing and sales to be realistic? How would it pan out into my bottom line? Well, once we do that and then review it to make it workable, we already know how much exactly can we spend because of the expected result based on the revenue we are targeting. So all those things are come back together. That's why, what we say is the biggest thing is come up with the mother of all strategies. That is reviewing your overall business strategy, and then start, like onion, peeling out all the different layers to go into more detail. If you understand that's the big picture, what do you need to do with marketing? What do you need to do with HR? How do you protect yourself, with the employment contract and all that? I'll actually come back together. That's good. So without further ado, I go through a few more questions. And by the way, just in case some of the attendees have to take off, we really appreciate that you are attending this. And we hope that you get a lot of values from this seminar. And we will actually send you some key takeout in the next few days. And all depend how things go. Potentially, maybe the recorded seminar in one form or another, maybe shorter version. So just watch for the mail. And those are some of the good things that's coming your way. So couple more question here. One of them is, I guess what they are saying is, if I have a look at my business, it says, considering all these challenges and your presentation you have said, and the panel discussion, what should I do if I got 3 things that I can do right at the moment? Right? In other words, focus. Remember, we are talking about, we got limited resource, let's focus. That's an interesting question. I think all of us are facing exactly the same thing. So any of the panelists want to take on this question and certainly have some view, but once again, I would like to open it to the panelists. George. You look pretty wise, mate. With your gray hair, you look the widest.
I'll always have something to say. I think there's one of the things that I say to people when I'm working with them. If you don't know where you've been and you don't know where you are, you have absolutely no chance of knowing where you're headed. If you don't know that you've come from south, you've got no chance of working out that you're going north, east, or west. So you've got to understand where you've come from and what's brought you to here. If you go back through what you were saying, Eric, and what Renelle was saying, there's various different methodologies that people can use. You need to do a review of where are we, what's brought us to here, and what are we looking to do to go forward. And then from there, you can structure your plan. So the first thing is to clearly understand your current situation and what's brought you to that. My business is a very small business by comparison to others. And the reason for that is I don't want a big business. So I'm not looking to have hundreds of clients. So in my review, the fact that I've only got a few clients, that's right, because that's what I want. Okay. Whereas somebody else through COVID might only have a few clients and they really need to have 150 to survive. Okay, they're in trouble. I'm happy at 5 and you're worried because you've only got 100 sort of thing. So you need to understand that. The next thing is, if you don't know that you know the stuff, get somebody that does. So I know how good I am, but more importantly, I know how good I'm not. I'm pretty good at accounting, but I'm not as good as Renell. I'm pretty good at legal, but I'm not as good as Mark. I'm pretty good at digital, but I'm not as good as Jason. I'm pretty good at technology, but I'm not as good as Melinda. I'm pretty good at strategy. Eric's got a totally different approach to strategy than I, and it's really good. That's why we work very well together. So understand what you're good at and stick to your knitting and bring people in to help you with the parts that you're not sure about.
Yes, absolutely right. Cannot agree more. And you know, of course, as you said, you've got to know where you are, and very importantly, people often miss is where you want to be, right? And then come up with a game plan. That is quite important. Any of you want to make any comment? And then most probably I might jump into the last question.
I will actually add on to that. One of the things which right now what is happening is because of the cloud way of working, latest technology with artificial intelligence is coming up a lot in the market. And this is a really good time to start looking into those, because that for the small business, earlier artificial intelligence was only the big corporate, big 500 companies can afford that. But now affordability have gone down. You might want to give a look into it, how you can make use of this latest technology to help your small business. And anyone right now with small bucks can go out, get those cloud softwares, and that might help them out. Thank you.
Very good. I think this question most probably for Renell. Once again, talking about limited resources, is that, you know, Renell, I sort of listened to your presentation, is all good, but some of them obviously a bit too much for me. I can't really understand. But can you tell me if I need to do one thing to save myself, right, out of all the things that you presented, you know, to us, what would that one thing be as far as financial control is concerned?
Well, it's hard to answer that question without knowing the person's financial situation. Yes. And what liabilities they've got. I think you've got to protect yourself first as a director. If you're in a company, or as a business owner, if you're a sole trader, you've got to protect yourself. You don't want to lose your house if you've secured that, or you've got personal guarantees. So if that's where you're at the moment, I think you really need to talk to your accountant and just work out where your position is. If your issue is collection of debtors, well, then you need to look at some sort of financing of that. It really depends on where the main problem is. And that is different for every sort of business and person in business. I think look at the main pain points. But for me, I think look at what your personal liabilities might be. Look at what debts you owe. If the ATO is your main creditor, you owe money for your employee entitlements, and you owe the ATO, I think you really need to sort that out, because that can have a significant impact on you personally. So that's what I would do. I'd look and see where my debts are, make sure that you're protected, and the earlier you do that, the better the outcome will be in every situation. The earlier the outcome, the earlier you do it, the better off you will be. Yes. I know there are pre-insolvency practitioners out there that can restructure debts and avoid insolvency for people, which is good. If you're talking about your business itself, I think get a real position on your financials. As I said, a lot of the liabilities might not be on your balance sheet. If you're not accounting for all those liabilities, you're accounting more on a cash basis. Get your actual financial position, as George said. You really need to have good financial information so that you can make good financial decisions. And I would suggest you do that in conjunction with a good advisor.
Very good. Okay, last question. Well, it says that this is pretty funny. I normally don't like to see lawyers because they cost me a lot of money. Sorry, Martin, can you tell us, from business perspective, we got a lot of possible challenges, as you mentioned, workers' compensation and contract and all that. the person said, can I ask you a question? What is the most asked question toward your legal firm at the moment as far as business related and related to COVID that they want to know?
I can't really think of anything off the top of my head. If that person who asked the question, you know, they must obviously be coming to a lawyer at the wrong time, because what I find is people generally come to lawyers when things go bad. It's probably the same with accountants, and you know, it's so often that people in business get into arrangements, partnerships, and it's all so positive and wonderful that nobody wants to sit down and actually work out what the arrangements are, what the you know what the parameters are, and what the responsibilities are, and then down the road problems arise, misunderstandings occur, and then they go to see the lawyers because of the breakup, and that's and something that could have been done with the shareholders agreement or a partnership agreement reasonably cheaply ends up being, you know, lawyers at 10 paces and a long-winded dispute. So you know, same with the employment side of things. When you're looking at flexibility, or if you need to do restructures and terminate some employees because you just can't fit them into the business anymore. You know, it's all about processes and being able to do it properly so that, you know, they can leave in a respectful way with their entitlements and things run smoothly, because it's those disputes that are going to cost you, and, you know, big at the wrong time. Yeah. So,
well, that's so true. I think, you know, as you say, often they come at the end with the problem already there. And the other thing I always tell my client is, you think lawyer expensive, wait until you don't engage one.
That's right.
Cost you about all the drama and the problem you have. So it's always good to have a good lawyer, you know, on your side and you know, ready to tackle any issue. So without further ado, I would like to thank everybody. Thanks to Ronel for presenting the great